Assalamu alaikum, Sat Sri Akal, Namaskar, and good evening to all of you. Respected CA SS Bhandari Sahab, our special guest of the evening, our eminent speakers of the day, Mr. Mansoor Sarwar from Sage Middle East, Mr. Pugal T from Tele Solutions, and Mr. Bruce Hamilton from Deloitte Middle East. Our most valued invited guests, our past chairman, ICAI Chairman CA Naveen Sharma, Vice Chairman CA Mahmood Bangara, my other colleagues in the Managing Committee, members of the chapter, ladies and gentlemen. Good evening once again. On behalf of ICAI Dubai chapter and its Managing Committee, I welcome each and every one of you. A special welcome to all our sponsors who always encourage us with their valued support. Our title sponsors, Aramco Group, Titanium sponsor Hamria Free Zone, principal sponsors, NMC and UAE Exchange Group, Danube Group, WTS Dhruva Consultants, and Oasis Investment. Our institutional partner, DPS Group, Delhi Private School, Platinum sponsors, Lulu Group International, Commercial Bank of Dubai, Malabar Gold and Diamonds, IFCO Group, Tele Solutions, Al Rawabi Group, Gulf Islamic Investments, AGMC, and VAT Middle East. Our event sponsors of the day, Sage Middle East. And last but not the least, our media partner, Khalis Times. We thank to all our sponsors. Ladies and gentlemen, I would like to start with the beautiful words of Jack Welch on leadership. Before you are a leader, success is all about growing yourself. When you become a leader, success is all about growing others. I am happy to say that ICAI Dubai fraternity has not only grown themselves in gaining knowledge on VAT, but there are many successful stories about ICAI members getting invitation from media houses, business organizations, and professional institutes to train their management and employees. A big round of applause for all of those are experts. Today's session on VAT reporting and returns is yet another step in our journey of developing our skill regarding VAT compliances and to clarify about various gray areas on VAT reporting. Our speakers today will help us in that. Ladies and gentlemen, we look forward to hear from those eminent speakers and experts about their views on VAT reporting and returns. We will introduce all the speakers as we go along the program. On behalf of everyone present here, I welcome all the speakers of the day. Please join me in welcoming all our speakers. Thank you once again and have a great event. I would like to invite now our chairman, CA Naveen Sharma, on the stage to address the gathering.
Ladies and gentlemen, members and guests, good evening. Your ExCom has completed 5 months. Introduction of VAT in the UAE is a historic move. This historic move has created historic meetings for our chapter. We conducted number of meetings and some meetings created history. Our first meeting of this managing committee on 7th October was the historic one. VAT Open Day was attended by more than 1,600 members, which is the biggest ever CP attendance in the history of not only ICAI Dubai chapter, but I am serious, all over the globe. No meeting of ICAI was ever attended by 1,600 members. We also did some unique meetings. And I want to list few of them. VAT cruise, where 15 VAT experts address the questions of the members and guests. 3 simultaneous meetings at the same time we did with 3 governments, Sharjah, Ajman, and Ras Al Khaimah. And moreover, we did the first online CP event by any chapter in the world, and I will explain. As of now, no ICAI chapter has hosted an online CP event other than your chapter. Online CP events are hosted as of now by CPE Committee of ICAI India. This is the first time on February 9th we hosted our online meeting where 1,675 members and guests took part from 22 different countries. People called from Korea and said that we are dealing with Dubai and we want to know more about the VAT. So our experts answered these questions. We got call from South Africa and in some cases from Europe as well. And the biggest contribution of your chapter is that in the month of June 2017, which is 1 year back, I made a presentation to the Central Council in ICAI India. And I said that the VAT is coming. Can you give us a certificate course which is not for the people or the chartered accountant who are living outside UAE? They said you are just 3,000 and we have close to 400,000. Why do you need a certificate? I said, you give it to us. I understand this certificate is not for 99.99% chartered accountant, but it is 100% for the CAs who are in the UAE. And with plus and minuses, I said, you will have so much money that you have not earned in the 16 years' time. So then the vice president, and I shared the name, Mr. Naveen Andy Gupta, said, minute it. I said, you can minute it, but I will give the reply. And I checked with Prabdeep Singh that we have already crossed 750,000 revenue from the certificate course. And this is the beginning of real internationalization of the ICAI. Because I said you have the GST, but Indian CAs who are outside the UAE will not do the GST. They want to do what the laws are applicable. In spite of all this, this is an emotional meeting for me. Emotions are, I'm aware, are very much personal. After completion of my BCom, my father took me to the best chartered accountant firm in Jaipur. Admission to that firm, as usual, was impossible. And I'm serious, it was impossible. However, luck was on my side, and I joined as Bhandari & Company, and that changed my life. We are fortunate and honored that Shri S.S. Bhandari Sahab is with us today, and he has agreed to give a special address. Although he will be introduced formally by C.A. Sundar Nurani, our treasurer, but I would like to share a few things about him. He was Central Council member for 3 terms. And it helped today when I was speaking to our outgoing president, Nilesh Vikramsi, that I am from S. Bhandari & Company. He said, my father was Central Council member with Bhandari Sahab. When I met Naveen Andy Gupta, then he said, the Rajya Sabha member and ex-president of ICAI was member with Bhandari Sahab. And this is a fact also. He was Central Council member for 3 years. He is a director for many banks for many decades now. He does lots and lots of charity and supports many organizations, including blind children. He built hostels for them, and he has helped hundreds of poor students to become chartered accountants. Alumni of S. Bhandari & Company is equally big, not only in India, but we always say bigger in Dubai and GCC as well. We have Sharad Bhandari Sahab, we have Dinesh Sanghvi, and many, many more. And Siddharth Mehta, partner KPMG, and I say Surendra Jain Sahab, there are many. We have close to 40, and numbers are growing. Members and guests, give a big round of applause to Sri S.S. Bhandari Sahab. Thank you, sir, for accepting our invitation to address ICAI UAE Dubai chapter. I am equally thankful to Mr. Mansoor Sarwar, Regional Director SAGE, and Mr. Pugal T, Associate Vice President, Tele Solutions, and of course, Mr. Bruce Hamilton, Partner, Indirect Tax, Deloitte. Thank you, sirs, for accepting our invitation to address today's conference. Give a big round of applause. As I have limited time, and I know that you are here to listen to the speakers, I would like to update you about upcoming meetings. Our annual conference will take place in the same room on 3rd and 4th of May 2018. In the same auditorium, we will have our annual conference. Our next meeting is on coming Saturday, hardly 3 days away. And your ExCom worked very hard to give you the unique meeting where all our speakers are women to celebrate the International Women's Day. There is a saying that a strong woman stands up for herself and a stronger woman stands for others. There are 4 speakers from 4 different walks of life, and I would like to share the details. Padam Shri and Arjuna Award winner, Madam Deepa Malik, will be speaking on the subject from paralysis to Paralympics. She is the first one who got the award in spite of she is having paralysis. And Madam Suchita Paul She is the only gold certified Zumba trainer. And we have, of course, Madam Rubal Negi, award-winning internationally acclaimed artist and Mishal Mumbai fame. She is coming first time to Dubai. Miss Rubal Negi has questioned herself why Mumbai slums should look like dirty or like a slum. With her efforts, slums of Mumbai today are colorful. Her Mishal Mumbai initiative has changed the skyline of Mumbai city. She will be sharing her journey with all of us. She has painted the slum areas in a very colorful like we have in Italy. For Indians, life is incomplete without Bollywood. And an upcoming Bollywood actress, Amriya Dastur, will be sharing her journey. She is a Bollywood actress and she has 10 movies in her credit. So she will be speaking, she will not be performing, she will be speaking on her journey to the Bollywood. And there will be a live musical performance by Miss Charu Sembal, Indian Idol fame, and meeting is open not only for members but their spouse as well. Dear members, I want to share one secret with all of you and promise to keep the secret in this auditorium only. As we are celebrating the International Women's Day, first 250 lady members and spouses of our members will get a special voucher. A special voucher we will give to the first 250 lady members. Keep this secret in the four walls of this auditorium. March is a month of change. Weather will change. Children will go from one class to another class. First exam and thereafter school holidays will come. As per the tradition of ICAI Dubai chapter, after a gap of 2 years, we will celebrate annual social get-together on February 23rd at Jabil Park. There will be lots of games, and Indian all-rounder Ravichandran Ashwin, who is at present the captain of Kings 11 Punjab, will also be part of the event. So there will be a cricketer who is the captain, and after our meeting, he will go and head the IPL team in Punjab. There will be a special performance from Bollywood singer and performer Amit Jadhav. Circular will be issued in few days' time. Now I request Secretary of the chapter, C. Anish Mehta, to take over the proceedings.
Thank you, Chairman. And there is a lot for the members to look for the month of March. The 10th of March, 23rd of March, Bollywood, Ashwin, many things to come. The circular for 10th has already been issued, so please register as per your convenience before 8th of March. And circular for 23rd will be soon released, probably in a couple of days. So moving on to our first technical session, which is on the topic VAT return and FAF audit file, how technology can help. As you know, the world becomes more connected and digital economy comes of age. Then cloud computing, business intelligence, and real-time reporting. We see an increasing number of tax authorities and business around the world adopting, reforming their VAT compliance system to take advantage of opportunities afforded by technological advancements and technological developments. To speak on this, we have a speaker with us, Mr. Mansoor Sarwar, Regional Director and Director Technical Services and Pro Sales Sage Middle East. And to introduce Mr. Mansoor Sarwar, I would like to invite our Vice Chairman, C.A. Mahmood Bangara, on the stage.
So many seniors here always refer S.S. Bhandari ji as their great guru. Sir, greeting, cheers, S.S. Bhandari ji. Our chairman, C.A. Naveen Sharma. My job is just to introduce Mr. Mansoor Sarwar. We spoke too much about Bollywood and everything. To me, it looks like, as far as chartered accountants are concerned, the biggest hero or heroine is VAT. When the very moment a VAT session circular is issued, your confirmations are large in number, and it is very prompt, and let us had an opportunity, we all had an opportunity to prove our professional expertise in VAT. For that, let's give a round of applause to all of you. Mr. Mansoor is a seasoned leader and a dynamic business management software professional with more than 18 years of relevant experience. As a qualified accountant by trade and a certified project management professional, he brings a diverse background to the business management software domain. His earlier experience as financial and management software domain, his earlier experience as financial and system auditor has given him comprehensive understanding of businesses and regulatory requirements and enabled him to successfully manage and lead by bridging the gaps between IT and business requirements in complex system re-engineering and re-implementations. His knowledge of ERP and IT domains is not merely honed with experience. He is a certified consultant on Sage technology and also a certified IASCA as CRIC, which is certified in risk information system control. Before joining Sage, Mr. Mansoor managed global ERP rollouts as the project manager of Colgate-Palmolive. He is well published in relevant press and presents regularly at different events. In his current role, he is working as Director, Technical Services and Pre-Sales for Sage Middle East. His team is not only responsible to lead the company's product strategy, but also interested with enabling the partners on Sage technology. Ladies and gentlemen, put your hands together to welcome Mr. Mansoor Sarwar to address us.
Good afternoon, everyone. Thank you, Mr. Mahmood. You actually definitely know more about me than I know myself. Thank you for the wonderful introduction. All right, let's hope I can get my presentation up. Is it audible at the back? I'll try to be a little loud. All right, okay, so let's get going, guys. I know we all have limited time and we have a long evening ahead of us, so I'll try to keep to the time. And it's firstly wonderful to see so many people turning up on a working day. So I think ICAI is the only institute in the region who can pull off this sort of audience. So wonderful, and appreciate all of you to take your time out. All right, so before we go forward into how technology will help you with the VAT return and VAT audits and VAT invoicing, we're going to take a few steps back in terms of trying to explain where the VAT legislation stands today, what the return means in plain English for people who don't have a software, and what it means for people. A VAT audit means what for people who don't have a automated software, and what do you need to have in your invoices, so that we connect the two worlds. If you don't have technology, what do you need to do? And if you have the right technology, how can it bring everything almost at a click of a button in terms of your not just VAT invoice, not just VAT return, but even the VAT audit file. So before we go into that, I normally like to start my presentation with one sort of question to see if everybody's still awake. It's early days, so I'll still go ahead and ask. Any show of hands who knows what is UAE FTS? Any show of hands? Okay, there are a few gentlemen who know. Maybe we'll give the lady the opportunity. Perfect, perfect, exactly that. And not many people know about it because though this concept or this solution has been around for more than 12, 13 years in the region, but it became very relevant for the VAT regime only last week. What happened last week was the UAE government, along with FTA, announced that now you can use the UAE FTS, which is really an online system of making payments for your VAT. You know, traditionally there are two options. One was e-dirhams, which is technically free. There's a token value, I think 3 dirham or 2 dirham per payment. And the other option was the credit card, which will attract 3 to 5% of extra fee. Some are debating it's 2, some are debating it's 5. I don't know what's going to be the final charge, but there will be a charge if you pay using your credit card. Now, this is the third option, which is going to be absolutely free if you use this to make your payment. So a good pointer for you guys to take home. If you haven't made your first VAT payment, you haven't filed your first return, you might as well look at UAE FTS and try to get registered to make this as your payment option for your VAT return. With that now, let's talk about, as I mentioned, I'll take a few steps back, starting with the VAT invoices. I'm sure all of you are aware there are two types of VAT invoices in the new regime. There's a tax invoice and there's a simplified invoice. Are mandatory components. If you miss one of them, technically you are issuing a non-VAT compliant invoice, which means your customer will not be able to use it to claim his input tax, which in turn means you'll have to do more work if nothing else. So you'll receive this invoice most probably back from them. You'll have to issue another invoice. So to save the time and hassle, make sure you have these. And more importantly, when you're receiving invoices from your vendors, make sure they're covering these points, which is more important. Your vendor is not really in your control because there are too many of them. Just make sure your vendors are giving you invoices with these 13 components. Moving along, obviously, your name with your tax number, TRN as we call it, and your vendor's TRN number, in this case, your customer's TRN number if you are issuing this invoice. The item's description, the item's date of supply, if it is different from date of invoice. I'm sure you're aware of this fact already that earlier of the advance payment, or supply or the invoice is when the VAT becomes payable. So if the date of supply is different from date of invoice, that date of supply has to be mentioned specifically on the invoice. So make sure you make it a standard format of your invoice so you never miss this. Just pick the date of delivery and put it on your invoice nevertheless so that you don't run this risk. Then the quantity and the units, if you're offering any discounts, discounts have to be mentioned line-wise. If the value with tax, the value excluding tax, the rate of tax, and at the bottom, if you're using multi-currency, you have to mention the foreign currency and the exchange rate you have used, which has to be in line with the central bank rates. So if you take care of these 13 points, you're issuing a VAT compliant invoice. If you're using any manual system or you're using system which is still not VAT ready, make sure at least the output invoice is addressing these 13 points. Invoice amount has to be in the dirhams. Payment amount has to be in the currency, but you have an important point we can double check, but this is the latest we received from FTA in terms of the guidelines. But important point, so make sure these laws will keep on changing as well and they'll keep on evolving. Only last week, a new change has happened in the VAT return. I'll talk about it when we come to the VAT, but 2 weeks ago we didn't know that. Last week they changed that. So keep tabs on those or work with a vendor who's keeping tabs on those as a software vendor and giving you updates with the latest invoice format, latest return format, and latest tax audit file. Let's move on to the VAT return in UAE. I'm sure you're aware of all of this because this has been out for a while. There are 4 sort of staggered periods in which you're supposed to file returns. Did anybody had a 28th February filing date and received an extension? Some people received extension, some didn't. So who all managed to file the first return? Maybe let's show of hands. So yeah, good, decent 10%. So you guys are the people who have to file monthly return, who are theoretically supposed to file every month a return. And 28th February was the first date. Lots of businesses had 28th February, but they received extension also. We know of many of them. But effectively, these are the 4 dates, 28th May, 28th June, 28th April, and 28th February, on which you had to return file your first return if you were a business in UAE. And then the quarterly or the monthly cycle kicks in. Now, most of you must have seen this already. If you have been to FTA portal, the top part of the system it's the return format, by the way. So the top part of the return of people who have not logged in yet to the FTA portal gets populated automatically. It brings from your own login credential, your tax registration number, your registered person name in Arabic, in English, the period, if you're using a tax agency, their names and details. So you don't have to really worry about the top part. Where you have to start getting worried is from where it starts, VAT on sales and all other output. Now, what goes into these 3 columns, amount, VAT adjustment, VAT amount, and the adjustment amount? Again, we'll quickly skim through this because we're going to hopefully summarize this towards the end with a quick video of how technology will help you with all this. But effectively, if I can really summarize it, there are 2 slides on it, and we're talking about deposits, commercial property, sales through vending machine, intercompany sales if you are not in a tax group, your sales of business assets, supplies made to staff, your deemed supplies, your reimbursement of expenses from your customers, any sales under profit margin scheme, and for non-resident person who are registered for VAT purposes in UAE, and the last but not the least, supplies of goods located within the designated zones. But if you look at other way around, it's much simpler. All your sales and services which are neither exempt nor zero rated nor under the designated zone scheme. That's much easier. So all sales and services which are not in these three categories will go into the box 1, with the tax amount, with the total amount, and with the adjustments. Adjustments are any write-offs or any bad debts. Second one is even simpler. Here we are talking about only tax refunds provided to tourists. So only if you are authorized and registered as a company which can provide tax refunds to tourists, you need to worry about it. Otherwise, this will go as 0. So the only companies who are registered to refund VAT to the tourist need to worry about it. All they have to do is populate the amount of what they are refunding. It will be obviously in negative, and you will claim this is a refund from the FTA. If you're not into this business, this box will remain blank. Moving on to the box number 3, very simple, reverse charge. I don't think we need to talk about reverse charge. Most of you have, I'm sure, already experienced. You're all qualified accountants, so you know how reverse charge works in the country. This is the box which is on the sales side, which is on the output side. I'm sure most of you are aware that reverse charge will be recorded twice in your return, both on the sales side and the purchase side, because as a customer, you are charging VAT on yourself, and then as a supplier, you're showing it in the supply as well. So the net effect will be 0, but you have to record it on both sides. So guideline is again very clear what goes in reverse charge. It's in plain English, it's all supplies from outside UAE which are coming to you, and you're charging reverse tax on yourself. A small change happened here. I mentioned this, that a small change happened only last week. There was a tax rate called IG. IG was inter-GCC states. I'm sure you must be all remembering, few months back, the government said that any supplies and services in GCC will be treated differently from a normal export and a normal import. In the recent regulation clarification, this has been sort of put on hold. Everything that is sold or purchased outside UAE is an export and import. There's no relevance of GCC anymore, so that IG section of the tax accounting, of the tax reporting will go blank until further notice. So that's a small change, but for a system perspective or from an accounting perspective, that's a big change, and you all should be aware of this. So this reverse charge is now about everything that you are importing outside the region on which the VAT should have been calculated. You'll have to calculate it yourself and report it here. Zero rated is probably the simplest of the lot. Only you have to deposit the value. You will notice there's no tax, there's no adjustment, because these are all zero-rated supplies that you have made. Zero-rated, again, I'm not going into the theoretical discussion of zero-rated and expert. I'm sure most of you know it. So section 4 only wants you to populate the zero-rated supplies in this section, just the value of those supplies. Exempt supplies is again similar. This is box number 5. So you populate all your supplies in the exempt. Again, the rate is going to be, the amount of tax is going to be 0, but you enter the total supplies under the exempt supplies section. Number 6, we are moving towards now the purchase side now. So that was the supply side. Output side is done. Now we're talking about the input tax side, starting with the goods imported into UAE. So you're going to enter your net value and the output tax, and this will include all imports which have been declared with the custom authorities. So this box will again get self-populated. You're not expected to fill this box. It should come automatically from your custom declaration as long as you have linked your TRN number to the custom declaration. So make sure if you haven't done it already, you get it done, because if your custom registration number and tax registration number are not linked, you will not get this credit from the system. And then you can manually claim it, but it's a complicated process, which you still can declare in the next section, and let's talk about that very quickly. So 7th section is really about what you disagree with in 6. So if an amount comes in 6 and it's not correct, for any reason you think your imports were more or less, for any reason, maybe the custom registration, custom declaration amount did not match with your TRN, or TRN was not even registered properly, maybe some transaction got missing. This will happen a lot in the first return, I would imagine, because not many people manage to get this done on 1st January. And until you get your TRN registered with the custom authorities, this will not link. So first few returns, maybe if not the first one, you will have to populate this manually. So anything you don't get in 6, but you think you deserve to get from the tax authorities, either a debit or a credit, you have to put it in this column. Very simple, negative or positive you put there. Number 9 is, now we are talking about normal expenses. So these are your standard rated expenses, which are all sorts of input expenses, whether it's utilities, whether it's rent, whether it's supplies, any goods or services purchased for business purposes from VAT registered suppliers. If I can really put it simply, that's what it goes into this box. There are few small exceptions in terms of returns and credit notes, but in summary, all your input purchases will go here except the imports. Imports we discussed, they're going in the box 6. And the 10th one, which is the last one in the box, besides the total, is where supply is subject to reverse charge. Remember I mentioned that this reverse charge has to be reported both on purchase side and sales side. So here we are talking about the actual purchase side where the supplies subject to reverse charge have been accounted for both in terms of their value as well as the tax. There's a very detailed clarification from FTA on this. You have to reconcile certain boxes. Just to add as an example, let's talk about the first one. Box 10 allows you to recover any VAT you have paid as output tax under the reverse charge regime, which was declared in boxes 3, 6, and 7. So this is where almost you can say the reverse charge is a good way to reconcile your input and your output tax, which is related to imports. And this box lets you enter these amounts manually, so you have to enter them manually. There are more clarifications on small, call it clarification on what goes into this box number 10, and I'm happy to share this presentation, but most of this, if you go to FTA website, there's a detailed handbook on how to file your return. Most of this information is readily available there, but I've tried to connect it to the respective boxes and make it a little more graphic and a little more color-coded, so if anybody wants it, I'm happy to share the presentation. So once you finish the step is not the right word, once you finish those 11 boxes, 2 of them are total, 9 are actual boxes, it brings you to this part automatically. The FTA portal brings you to this part where it shows you what is your net tax payable. Total in terms of for the period, total recoverable for the period, and the actually net tax payable period. Ideally, this should be fine with your manual reconciliation. And why we're talking about manual reconciliation? Because I'm assuming you're not using a tax accounting software or a software which is already helping you to do all this. If you were using a tax accounting software, we'll talk about how this helps. But otherwise, manually, you'll plot all your sales, all your purchases in a spreadsheet and try to match them with this total. If you're fine, you just give this declaration of profit margin scheme at the top, and this bottom box again gets populated automatically. What is coming in the bottom box is, again, your name in Arabic, your name in English. When I say your name, it's the tax person's registered name, whichever is the registered name of the tax person for your organization. Your phone number, your date of submission, and your email address. Email address is optional. Once you submit it, it's an official confirmation that you have submitted the tax return. After this, you cannot edit the tax return. So this is your last stop before you do your final reconciliation. Otherwise, it's officially submitted. The next step, obviously, is the payment of VAT as well as the penalties. Government gave some call it flexibility or waiver on the administrative penalties. You must have noticed it recently. If you haven't registered yet, if you haven't filed properly, they have given some administrative waiver for at least this quarter, but we don't know when this will actually kick in again. In theory, the penalties are in place and they're well defined in the regulations, but for this time they have given a waiver. Having said that, you have to pay your total tax payable, plus penalties if any, using, as I mentioned, either your e-dirham or your tax or the online payment that has been introduced only last week. Once you do that, the next pop-up will come based on what you select, either as a dirham, e-dirham, credit card, or the third option will pop in as well. You make the payment, you receive a confirmation in your email. So once you receive a confirmation that your return has been officially filed, officially you're done with the process. Now let's talk about something very, very quickly, FAF audit file. This is a CSV file. Not many of you must have noticed it, or not many of you might be even aware of it, but this is a regulatory requirement for us as software vendors. All the software vendors have been given this guideline by the FTA that if you are going to be compliant with FTA guideline, you should be able to generate not just the VAT return, the VAT invoice, you should be able to generate the audit file as well. What does this file do for them? This is a single sort of screen view of that, but let's talk about this very, very quickly in few points. Firstly, it talks about the header. Header talks about taxable person's name, taxable person's tax registration number, your agency if you're using any, agent's name, start and end period of your FAF file, as well as the product's version that you're using for FTA. What are they trying to achieve with it? It has three distinct components: the supplier component, the customer component, and the GL component. In all three components, they expect the software to fill this for you. And this is where technology will help you anyway, because it is not only useful when they come to you for an audit. It's useful for you every time you're filing a return, because if you can generate this file from your software, you can do the manual reconciliation from the system. I'm still using the word manual, but still you're comparing your detail with your totals. Return was your totals, and these are your details of each transaction, whether it's for the supplier, whether it's for the customer, whether it was a bad debt, whether it was an adjustment, whether it was directly in GL. So wherever the transaction was recorded, they expect you to record it separately in each column. And in this file, I'll share this with you because we don't have enough time to talk through all these points, but these are the columns that are mandatory to be there in the FAF audit file that you have. Now, when I say you don't have to prepare it as a business if you don't have a registered accounting software. But if you have a registered accounting software, you have to produce this, and we have to enable you to produce this. So onus of this is on software vendors, but as a customer, as an end user, you should expect your software to produce this, because first, it gives you a peace of mind that software is FTA compliant, and secondly, it gives you a manual tool even if the audit doesn't open, as I mentioned. Hopefully, none of us will get called for an audit because it's a scary concept, but even if you don't have an audit, this helps you in reconciling your audits versus your totals. So supplier side, as I mentioned, customer side, and in summary, your general ledger, which is non-sales and non-purchase transactions on which VAT was still accounted for. I'm not going to go into too much detail of the FAF audit file. Last point before we show how a quick video will hopefully sum this all up is the tax refunds. Again, very important concept. Many people are not considering it right now because obviously you'll start calling for refunds only if your taxable supplies towards the sales are higher than your taxable input. Input tax is higher than output tax, you'll obviously claim a refund. Now, if you have to claim a refund, there's a separate area in this FTA portal where you go and you click on submit the refund. When you submit a refund, there are certain data that they want you to fill online. FTA is very clear about this, that they'll take at least 20 days, if not longer, to scrutinize and accept or reject a claim. If a claim is accepted, they'll pay within 5 days. If it's rejected, it's rejected. But you have to claim this as a separate transaction. You can't, if your tax return is negative, you can't automatically expect that because my net payable is negative, somehow I'm entitled to return. You have to go here and claim the refund separately. That's available on the FTA portal, but just be mindful of this, that you need to submit this separately. Now, this is what I said, that I've tried to put a video together because we don't have the luxury of time today and I didn't want to log in into different systems. I've taken one of our products of Sage and trying to show you how return and audit file can be done automatically from the system. So this is one of the Sage softwares we have. We go to tax services, we go to VAT return, we double click, again simply we give a date of from and to, because some customers will have it monthly, some will have it quarterly. So from which date to which date you want the VAT file to be generated, VAT return to be generated. And it should come out exactly in the format which can literally be copied and pasted onto the FTA portal. If you noticed it, we have made sure every box has the right amounts and the right definitions in line with the FTA guidelines. Once you do that, the second important point is, which I was talking about, is the FAF audit file. So this is the CSV file that authorities expect you to generate if you have the system. But more importantly, I recommend that you should have it in your system so that you can do your manual reconciliation before you actually press the submit button. So again, it's available out of the box in all of our products, but we're showing it to you from one of our products. It'll go to the desktop and we'll show you the CSV. So this is the actual output for that period. Remember, if you noticed, we gave a from date and to date. So again, it has populated with all the data, starting with supplier, as I mentioned at the top. And now scroll down will take a second, but I'll try to jump all the way to the end. It goes through all the suppliers, all the customers transactions, all the GL transactions, and then it gives you total all the way at the end of the FAF audit file, sorry. So this, sorry, I'll try to pause it if I can. Yeah. If you see at the bottom, there was, I'm not good at pausing this. Yeah, managed to. So see at the bottom, this is your total tax payable. At the last row that you see, it is automatically the header total. So header summaries and header totals of this file should help you in manually reconciling your total tax payable or receivable in your return file should match with this. And if anybody wants to do an audit, now you can literally see what the breakup is and what the files are. So effectively, this is your assurance. If an audit opens, you are covered, but more importantly, at every return, you have a peace of mind that all your detailed transactions are mapped to the total return file. So this is how systems can help. I'm going to probably wrap it now. A quick introduction of Sage, only one slide about Sage as an organization. I don't know if all of you are aware or not, but we have 3 million customers globally, focusing mostly on mid-market, but we have many customers in enterprise space as well. We're a British company out of Newcastle, but have offices in most countries of the world, including UAE as well as India. The last slide for today is really a summary. So effectively, how technology will help, you saw it in a video. You saw how return should be generated from the system. We don't expect anybody to have enough, call it intelligence or time to manually check each line of the invoice to make sure right tax codes, right tax amounts, right descriptions are being populated. You should have a system that gives you a pop-up errors if you're not following one of the guidelines. And more importantly, your return, your invoice, and your audit file should be a click of a button and not a manual procedure of exporting lots of data into Excel and then importing it into different formats and then converting into return files. Because that's, again, prone to errors. We all know, we all love Excel. I'm an accountant by trade also. We love it, but we know it's really prone to errors. It's not the best tool if you're talking about compliances and return files and online reporting. So make sure you have these 4 really, if you're having a system, and if you're going for technology, which I'm hoping all of you can, because technology in today's time and age is not very expensive. We are here, there are lots of other vendors here. It's not really a capital expenditure anymore. There are softwares available almost as a cloud, as a subscription based, where you can pay a few hundred dirhams and get yourself covered. So it's not worth a risk taking anymore if it's about choosing or not choosing technology to be compliant. But whatever you're choosing, make sure it at least gives you, not only, at least gives you the tax invoices, the return from the system, the audit file, and the implementation guideline on how to use the system. If you get these 4 things from your software, whether it's in-house built, whether it's an international one, ideally go for an international one because they would have experienced it in multiple countries, they would have registered themselves with the FTA, so you're more covered. But whatever software you're using, make sure it gives you these 4 things out of the box. These should not be manual. So that's where we feel that technology can really help accountants in getting everything together and focus on the actual work, which is analysis of data, compliances, how to do tax planning. This is where you guys should not start thinking that what should be my credit terms to my customers versus credit term to my suppliers, and how do I optimize my tax liability and have minimum cash outflow based on the tax returns. Those are the thinking patterns that you need to think at rather than thinking, how do I file my return? That should be done on a click of a button. And there's enough technology around, not just Sage, there is enough technology around to work with that. So talk to us and talk to all your software vendors to hopefully help you with that. With that, I'll call it a wrap. I think I've run out of my time as well. Thank you very much.
Now it's the time to listen to our special addressee. A little bit have been told about it. The formal introduction will follow now. And to have the formal introduction, I would request our treasurer, C.A. Sundar Nurani, to please introduce the special address by C.A. S.S. Bhandari. Will follow after that. Thank you.
Good evening to all of you. Mr. S.S. Bhandari qualified as a chartered accountant in 1970 and secured merit in both intermediate and final examination of the ICAI. He is founder and senior partner of Messrs. S. Bhandari and Company, Jaipur, since 1971. The firm is having 18 partners, has been statutory central auditors of all large public sector undertakings, nationalized banks, including ONGC, Shipping Corporation of India, BSNL, in addition to other assignments. Presently, the firm is statutory auditor of Union Bank of India, UT Asset Management Company Limited, and Himachal Futurities Communications Limited. Mr. Bandari was also nominated as Independent Director of Central Bank of India by Ministry of Finance in 2002 and also Bank of Baroda in 2011, which provided him vast exposure to banking sector, and his contribution was greatly acknowledged by chairman and all the board members of these banks. He was also RBI nominee for many banks and financial institutions and many other large companies, and member of PK Call Committee on Mutual Funds, constituted by SEBI for rationalization and strengthening the regulations governing mutual funds in India. Please join me in welcoming CA SS Bandari.
Thank you very much for very kind words. You spoke about me. Mr. Naveen Sharma, Chairman. Mr. Anish Mehta, Secretary, and other executive members of the Dubai chapter. Mr. Mansoor Sarwar, Mr. Pugot T, Bruce Hamilton, and the other dignitaries on and off the dais. Dear fellow professional brotherhood, ladies and gentlemen, good evening to all of you. It is really an honor and opportunity to be with the members of the Dubai and other chapters of UAE. Well, I was looking forward for this opportunity because I had the occasion to attend some of the previous interactive meetings and seminars of Dubai chapter as well as Abu Dhabi chapter, and I found them quite interesting and very useful for the member of the profession. I greatly appreciate Naveen and his colleagues for the hard work they are doing for enhancing the academic and professional excellence, organizing and social and other activities. Dubai chapter has been awarded as the best chapter of ICAI a couple of times, and which is a matter of great pride. I wish this saga continues. Friends and colleagues, disclosure of interest has been done by Mr. Naveen Sharma about he being my student as well as partner, and I am very proud that a day when a father is recognized by his son's introduction and a guru is recognized by his colleague's name, it's a matter of great pride. Well, when Naveen informed me about this session on VAT and he wanted me to participate, I told him that VAT, of course, needs thorough understanding at each stage for proper compliance. There are other issues of current interest which would also be necessary that persons staying in the Gulf region also get update on those areas. The recent frauds in Indian banks are hotly reported in last fortnight, and I have therefore selected for today's address the subject of optics of bank frauds, and also to update you on the development and challenges before chartered accountant profession. Well, I must share with you that I will share with you some of the latest developments which has taken on Indian scenario, and they are good warning signals for all of us. My address may focus on recent developments, as I mentioned, with reference to Indian context, but these will become equally pertinent in near future in all continents and countries. Optics of bank fraud, friend, it's a very frightening and grave area, but not so alarming in the sense that Indians are exposed to these type of frauds right beginning from Lalu Yadav's Charu Gotala to Harshad Mehta and so many things which has happened. Our economy is very robust and we have a capacity to and resilience to meet all these frauds. But my focus will be more on how our profession is exposed and why it is being severely criticized in various corners of the country. We have idea of the frauds conducted in the United States in Merrill Lynch and Lehman Brothers, which collapsed these big entities. And some of the reckless and dishonest, unscrupulous person always take advantage of the banking weaknesses to exploit to their benefit. Just to share with you important 2 or 3 figures which are very important to understand banks, which you are all aware because it's a part of our profession. One is non-performing assets. Reserve Bank of India has got their own guidelines, prudential norms in this regard. Although non-performing assets or NPAs become a word of unnecessary tension these days, but it is not so alarming because there are very reasons that an account is classified as substandard or a doubtful asset, and they come back to their normalcy in due course of time. Non-performing assets are around 10 lakh crore in Indian banking scenario, and which is about 10% of the total loan exposures. But alarming is that out of this 10 lakh crore, about 1 lakh 11 crore has been classified as willful defaulters. So right now we are going to see the frauds and willful defaulters areas. It was when Punjab National Bank filed a complaint with the Central Bureau of Investigation in the last week of January that the nation got a shocker. This was one of the biggest fraud which has perpetrated in India by the jeweler Nirav Modi by using a letter of undertaking route. Just to briefly introduce how the system in India works normally, we have after the Nirav Modi's group fraud, you must have read reports, newspaper reports containing certain frauds which have been reported or invoked in last fortnight. It was that Pan Parag Rotomac group, 3,695 crores. Sabya Seth group, 390 crores. Symboli Sugars, 110 crores. RP Info System, rupees 515 crores. These are some of the frauds which have been reported. And as I said, fraud has become part of life. When I was coming to this venue, I read a news item that there has been huge fraud conducted for the refund by the government employees in respect of the tax deducted at source. So and so forth, this goes on. As I was trying to introduce you briefly how this fraud was conducted, and before that, I must mention about SWIFT system, which is at the heart of this gaming, and also about the CBS. SWIFT, or Society for Worldwide Interbank Financial Telecommunication, is a messaging network for securely transmitting instructions for all financial transactions through a standardized system of codes used by more than 11,000 financial institutions and 200 countries worldwide. SWIFT is a secure message carrier. And then when the chairman of that committee went out, so that secretary of the department, he was a secretary in the planning commission. He asked, sir, what I have to do? Okay, we have storage, put it there. We will see later on. So this is the fate of the committee. So Reserve Bank, just to keep you updated, we have set up a, Reserve Bank is very hard. Reserve Bank, no, as I said, nobody will Jessica. Reserve Bank has never taken any responsibility on any of the issues. It just know how to take right of other people. But this is not our subject up to analyze the institutional goodness. But this is one committee which has been set up. Then another thing which has happened is that Ministry of Finance, Government of India has issued direction that all accounts with a non-performing assets above 50 crores should be immediately looked into. And if there is any fraud angle, this should be reported to CBI. Oh, when I read this circular, I got terrified. As I mentioned to you, not all accounts are, non-performing all accounts are not bad or with a fraud intention. There are a lot of situations. Who is responsible? I don't know, whether judiciary or whether management or whether the environment or something, infrastructure problems or political situation or the Bandh. In a lot of projects in Odisha and Madhya Pradesh, they could not acquire land. There was a local agitation. We didn't allow mining rights or a lot of things. So who is responsible? Nobody knows. But now they want that if you see any angle of... So therefore, all non-performing assets are not with the intention to cheat. But now they want every account to be seen, and if they see any smell or angle of fraud, report it to CBI. And you know, if they report, with my experience on bank for 20 years, if you report any bank to CBI, it is a death warrant issued to him. And even if there is a potential to revival of that account or restructuring of that account, no manager will touch. This is story number one. Story number two, who will see these accounts of 50 crores? Same management, same managing committee. There is already system. We get a review report of all non-performing assets every month in the managing committee, which is the highest body after board of directors and which really looks after all loan and other accounts. We get all the reports, we get all the papers, same people will. Now only thing will that in normal report they say that we are doing this effort for revival and we are doing this and that and so forth. Very positive reports. Now everybody will say, sir, maybe some invoice was missing, so it is a CBI case. And then it's all closed for that. Incidentally, before this fraud broke out, on 12th February, 13th February, Reserve Bank of India direction, classify, you know, briefly I would like to keep you update on another very important issue, prompt corrective action. This is a PCA direction which issues by Reserve Bank of India. Any bank whose solvency ratio or NPA ratio goes above a particular point, they are classified as a PCA. And once you are under PCA, your lending powers and many things ceases. So already banks have stopped working in India. You can't get any loan, no employee is prepared to take any action. And that's the biggest damage which is causing all this fraud and bad publicity. I am telling you, it is not so serious matter. And our economy is robust enough to handle these. There are a lot of consequent issues, whether the bank capitalization, recapitalization is good, whether they should go to private sector, and all this debate can be done for a long time. But the point I was drawing attention is the loss of public confidence and loss of the moral of the employees is the biggest calamity which is happening in this process of banks investigation and put under greater pressure. They were not working otherwise also. I must share with you, with my association as auditor and as advisor and being respected in Banking Board Bureau and other bodies as a chartered accountant, I have been asked to give them support and advice. Manaka, you are unnecessary discouraging and killing the banking system in India. But two good things which have happened recently is a bill which was proposed when Vijay Mallya ran away from India. I think last year itself this was prepared by the Ministry of Law and Finance together. The title of the bill is the Fugitive Economic Offenders Bill. A very important step which I would like you to know a little more about it. This is when they learned that people do fraud, Nirav Modi ran away from India, and to name many more who did this. Now I am told some of the frauds which I told you in my introduction, some of their owners have also left India and so on and so forth. So they have said that the Fugitive Economic Offenders Bill, which is already in discussion in the current session of Parliament and maybe become a law very shortly, is to impound and sell assets of all Nirav Modi type escapees, a move that will allow quicker recovery of dues through a special court from absconding corporate defaulters. It defines fugitive economic offenders as a person who has an arrest warrant issued in respect of a scheduled offense and who leaves or has left the country so as to avoid criminal prosecution or refuse to return to India to face criminal prosecution. Likewise, the draft bill defines the wide range of offences including willful loan defaults, cheating, forgery, forged, fraudulent document, electronic records, etc. To qualify as a wide range of offences. This will surely stop some of the promoters from taking unwarranted shelter of the courts, because one of the major issues in the recovery is now that our courts are so time-taking process that we are, even if some good case is made by any agency or bank or CBI or anybody to dispose of some property, it is a Herculean task to take it forward. But this will surely help the government to recover the dues. One thing, I am positive about the fact that under the Insolvency and Bankruptcy Code, National Company Law Tribunal has been set up all over India. And you must be aware that all big loan defaults of 10,000, 15,000 crores and above, they have all been referred to the NCLT. NCLT is very fast mode. There are a lot of good things which are happening on that front. They are getting advisors and offers to sell, and some big companies all over the world, they have shown interest in those projects. Maybe they recover only 50% of their dues. They may have to take a haircut. But I'm not against that. Of course, the NCLT is the final authority, because after all, let the closed companies be revived. We have huge investment in a Bhushan Steel, 80,000 crores, alone single promoter. Those companies are closed. SR Steel, I don't want to go into the genuineness or these issues, but I will only share one thing with you, that I'm sure he has not come to warn me that I'm crossing my time limit, because I'm afraid and I lose my balance. So I'll only take 5 minutes more. That NCLT is a very positive thing which is happening, and we look forward that it will support the banking system, and also in future it will resolve, because if a promoter cannot revive his company, let him go to NCLT. For fast disposal, he gets immunity and so many things from that. I have already explained to you about the NAYAC Committee and Banking Board Bureau, but latest news, again it is a committee, but the honor is that this committee is set up under the chairmanship of Mr. Y.H. Malegan, our past president and a legendary chartered accountant of the country. And the mandate to the committee is that he was on the board of Reserve Bank of India, a close friend of mine, and he is a really, although he is 80 years of age, but he still has same presence of mind, and I often tell that uske muh se Saraswati behti hai. He is a goddess of learning on his tongue. The committee will look into the entire gamut of issues relating to all classification of bad loans, rising incidents of fraud, and effectiveness of the audit. Friends, another thing which I developed, I am not very good on IT or the communication systems, but surely the blockchain concept, which is coming up very fast in the world, this will ensure that the fraud which are committed in a SWIFT doesn't happen. And Reserve Bank of Asia has already taken a lead. State Bank has formed a consortium, and this technology is developed by foreign data experts, and suggested this technology to prevent scams. Much details, you all know, you are much more savvy on technical things, but challenges before, I will only touch upon the challenges before the profession now. A lot of authorities, SEBI, Government of India, and the Serious Fraud Investigation Bureau, Government of India, they have seriously filed complaints against the working of the ICAI. I don't know who is to be blamed, but India was not prepared to go for a commission which was set up in United States after the Enron and other scams which draw attention in United States of the various community, and they set up a board there to overlook the functions of the chartered accountants. But in India, and that is working very well, the full name I forgot, it's a, so that board, that is a public company accounting oversight board, which work in USA and oversees the function of the PCAOB, oversees the audit of brokers, dealers, including compliance reports filed by federal securities laws, and also looks into all the aspects of the functioning of the auditors. And the company, they have suo motu powers. So on the same lines, in India, now they have taken a final call. This was already proposed in the Companies Act 2013 to set up a body who would overlook all the functions of the auditing community and all that. This is a NAFRA, National Financial Reporting Authority. The center is considering setting up a National Financial Reporting Authority as envisaged in the Companies Act. This will lay down accounting and auditing standards to be followed by in the country, monitor and enforce their adoption, and oversee the quality of the auditing profession. Oversee the quality of the auditing profession, very important. Importantly, it will have the powers to investigate, suo moto or on a reference made to it, of misconduct by chartered accountants. In short, the body will be a super regulator that will take over the regulatory functions of the Institute of Chartered Accountants of India, and ICAI would be reduced merely to the role of examining and certifying body from its present status as a self-regulatory organization. That's where I wanted to caution the AIA. Not surprising that ICAI is opposed to this, but this is a reality fact. What I foresee is that these things are going to come in due course in all developing countries and all regions. As I mentioned to you, SEBI has been pursuing this body following inaction by the ICAI in investigating the role of auditors of a set of 132 listed companies where the regulator suspected price manipulation. Very serious charge. Role of auditors. SEBI had referred the cases to ICAI in November 2015. Likewise, Serious Fraud Investigation Officer has referred to the ICAI names of 34 chartered accountant firms suspected to be involved in money laundering. The ICAI acted only on 5 of them. Last, the Supreme Court order, which has been passed, I'll only not debate on that. The wording which they have used in order should be enough caution point. It was in a public litigation petition, public interest litigation petition, filed by famous Prashant Bhushan, who is known to all of us, but I am a great admirer of him because he does it without any passion or fees, and most of his things, I don't want to go into scams of 2G and 3G and all that. But the few lines, our auditor profession, para 48 and 49 of the order are reproduced. Thus, a case is made out for examination, not only by expert committee and further examination by the ICAI, but also by the central government, having regard to the issues of violation of RBI, FDI policies, and the CA Act by secret arrangements. This order clearly mentioned the name of one of the leading, one of the 4 leading accounting firms. This was specifically passed on that judgment after the SEBI prohibited them from conducting the audit. And it is not my forum to disclose the name, but the order says that. 49 is worst para which is written. It can hardly be disputed that profession of auditing is of great importance for the economy. Financial statements audited by qualified auditors are acted upon, and failure of auditors have resulted into scandals in the past. Failure of the auditors have resulted into scandals in the past. The auditing profession requires proper oversight. Such oversight mechanism needs to be revisited from time to time, and that's why they have referred from Anderson scandal in 2002, the Sarbanes-Oxley Act was enacted in USA and all that. So this is what the Supreme Court feels, and this is very serious comment on the profession. I will like to close my address saying that I am not aware much of the local laws and local legal practices in the Gulf region, but I can foresee more stricter regulatory and reporting requirements in sight, particularly after introducing taxation and their laws. As I told you, I was on the bank of board director, and I was also chairman of the audit committee there. I had a video conferencing with the auditors of some of the bank has got 30 branches outside India. And when as the chairman I was seeing the audit committee reports, I found them, there was nothing. Internal auditors, they were internal auditors, external auditors. And when I questioned them on some of things, they said that issue of checkbook can be done on the basis of a fax or a mail. This can be, funds can be transferred on such instruction. They don't check this. And there were so many other things, opening of LC and all that. When I questioned them, And it was again one of the large accounting firms, because our branches doesn't like small firms. They want to avoid headache and give all the work to large accounting firms. Not any member of the accounting firm not to be offended, but that's what I can share with my experience, that more stricter regulatory and reporting requirements are in sight. And so all those formatting of the auditor's report, formatting of the disclosure, balance sheet, profit and loss account, all that formats are going to be very strictly observed in the entire region. As I mentioned, the entire world economy is getting close-knit. The money laundering, drug menace, smuggling and other financial issues are under clear focus as a menace and for aggressive action worldwide. Last and not the least, ongoing terrorism, which is closely interrelated to such illegal financial activities, has really been a matter of concern for every nation and society. And that's where our role is very small, but whatever role has been assigned to us, we should try to complete the same honestly. Friends and colleagues, if you have liked my address, I deserve the applause. If not, blame goes on Naveen. Because as he said, he's emotionally attached to me. And I finished my prayer, and we have this prayer in our office with 2 lines only. I'll share with you, and I'll translate it to English also to the extent possible. And that's where every citizen of every professional, all of us, as a member of the society or a nation, we cannot keep ourselves away from that. Society, we are in existence only because the society and business trust us. And the day we lose our trust, we will be thrown out of the system. We are not advocates. We are trustees of the person who have invested money in the companies. We cannot say we are only a dog who will keep on sleeping and somebody hurt him, then he will wake up. We have to be not bloodhound, but we have to be cautious, as I have been repeatedly saying. So these 2 lines of the prayer, you can sing with me. Itni shakti hame de na data, मन का विश्वास कमजोर होना, हम चले नेक रस्ते पे हमसे भूल कर भी कोई भूल होना. This is only to pray that external powers empower me with all that energies and determination where I do all good things, and there should be God, you ensure that I am not tempted by those things where I forget my path. Thank you very much and good night.
Moving to our next session, which is on VAT Simplified. And we have Mr. Pugal T with us. I would request our executive member, Gopu Naidu, to please come on the stage and introduce our eminent speaker.
Salam alaikum, good evening, and namaste. It's my pleasure introducing Mr. Pugal. Pugal has 36 years of wide-ranging experience in the field of accounts, finance, statutory audit, and training. Prior to Tally, Pugal over the years has successfully represented the clients on the sales tax, income tax, assessment, and his manual accounting and finalization was the core strength. Pugal has handled audit functions for over 10 years, covering the spectrum of businesses in trading, manufacturing, hospitalization, professional services, entertainment, non-profit organization. He also was authorized Tally education partner, had trained over 1,000 students, also involved in corporate training and Tally implementation for ranging large corporate houses and MNCs. In 2005, when the VAT was introduced in India, he was heading the subject matter expert function of R&D and was responsible for VAT functionality for all states in Tally product. Pugal was also heading the product management function for Tally ERP 9 auditor edition. The entire R&D product requirement was provided to the R&D for statutory, tax audit, and financial statements as per the Companies Act. He's also conducted over 100 ICAI chapter events on tally, statutory model, and audit tool till date. His formal qualification is BCom from Bangalore University, intermediate level in ICAI, and also business management from AII BM from Chennai. Let's put our hands together welcoming Mr. Pugal. Thank you.
Good evening, everybody. I thank ICAI Dubai for giving us this opportunity to present before you the simplified solutions that Tally Solution has brought for VAT compliance in Dubai. I'm really proud and honored to stand on this soil which created a revolution by introducing for the first time in the history of the country indirect taxation system. And also, I'm coming from the land where we again created a revolutionary indirect taxation system of GST. So all of us are sailing in the same boat, only thing, we are sailing in a little rough weather. I'm really envy of all chartered accountants here because you people have such a simple indirect taxation system, very easy to implement, very easy to administer. Okay? On the contrast, if you see GST in India, great legislation, great law, but there's some rough weathers in implementation. So we used to go and meet customers, just to give an anecdotal example of what is the scenario there in the, where we are on the transitioning of the new law. So we used to go and meet customers. So we went and met a customer. In fact, I went and met a customer, and then I asked him, how are you taking GST? How is the new taxation system? So the owner of the company said, do you know what is the full form of GST? I said, yes, sir, it's goods and services tax. Nahi bhaiya, God save taxpayer. Okay? So I said, we will, in any situation, I mean, like, this is the first time we are coming out with such a huge taxation reform, so it will take some time. And then went to the accountant, and then I asked him, so what do you feel about GST? Sir, for me, GST is government-sponsored tension, sir. Because, I mean, like, every time I'm trying to, be serious in filing the return, there is an extension, right? And that way, if you see, it is really, really great here, the way the implementation process is being taken forward. Like, one best example is the VAT return being, extended for many people. I mean, like, the first return, some people will have 3 months, 4 months, 5 months, which is the staggered VAT return filing would really help. So with this experience and with this learnings that we had in our country in the GST implementation, we were thinking that how can we, see, the law is very simple according to us, because we have seen the worst of the situation there. So when we see the law here, it seems to be very, very simple and it seems to be like a child's play. So according to me, VAT here is very attractive taxation system in the country. All right? So what we thought is that what is the challenge that we as a software company have to provide a simplified solution for compliance of VAT, since this is going to be the first time where people are getting exposed to a taxation system. There were 3 questions in our mind. How do we make the accountant's life or the person who is going to key in the crucial data as per the compliant requirement of VAT? How can we simplify his life? Because the law, though it looks simple for us, I mean, like, since this is going to be the first time, it takes time for people to get used to the law and get the better understanding or proper interpretation of the law. Number 2 is that how quickly can we give the output so that the compliance is not going to be a burden and the businesses need not have to be compelled to have any complexity of running their business. So how quickly we can give the confidence of the compliance. Number 3 is that chartered accountants, the tax advisors, tax practitioners being the guide and the mentor for many businesses, especially where this new taxation system is being introduced. How quickly can the technology give the confidence and trust of the data that is being created and the data that is going to be ported on the FTA side in their VAT return? So these were the 3 main broad questions that we had. So I would take about 15-20 minutes to basically tell you about, rather than saying that, I'm not going to show the demo of the product and saying that how are we solving it. What is that we are solving, so that at the top level you get a confidence that, okay, so is this the right software that you would be wanting to evaluate, right? So technology for VAT, if you see, these are the 3 broad areas. So one is the input. How are you going to capture the input? So there is this company needs to be created, the master needs to be created, right? So this is the first step. So company master setup, how quickly the company and master setup can be done. Number 2 is that how quickly can you record the transactions based on the configuration that you have done, such that those transactions are in compliant with the requirement of the VAT law, right? The third thing is that how quickly can you generate your statutory compliance reports. By click of a button, how quickly can you generate or print the VAT return? Because currently the system doesn't have the connectivity to the FTA site where you can port the data directly from the system. The third important aspect is that how quickly the tax expert, the chartered accountant, or the guide and mentor of the businesses can quickly reconcile the VAT data that has been created and make sure, ensure that the data is right as per the requirement of the law, such that they can now log into the FTA portal and then file the return. So one important aspect that what we have done as the approach towards the solutioning of the VAT is that the complexity of compliance, the technology should understand the law and imbibe the complexity of compliance into the technology, such that the user who is using the software gets the simplicity of maintaining of accounts and meeting the compliance requirement. Now when you come to the company setup, so what are the critical information that is required will be captured there. You can configure whether your company is filing the return on a monthly basis or a quarterly basis. These are the one-time configuration that is required at the company setup. Then the VAT rate. Again, fortunately here we have one single VAT rate, and majority of the goods fall under the one standard rate of 5%. So the VAT rate setup can be done at the company level. Next is the stock item. Just in case, if there are some items which are falling under exempted, or if you need to have any, in case going forward, if there is any rate change, the stock items or the SKUs can be configured for the standard rate or whatever rate applicable. Party ledger, again, it is very important, where the country and the emirate is selected such that, the reporting as per the written form, like the place of supply and various other things, like, the masters that we create, the party masters that we create, that how the party masters can determine the transactions that has been passed, whether it gets validated. Just to give an example, supposing a party is created who's outside the UAE Emirate, and when the transaction is passed, even if the accountant by mistake tries to select a VAT ledger, right, the VAT should not be computed, and the warning should be provided saying that, hey, look, this party is outside the Emirates of UAE and you cannot charge VAT since it is an export. Right? So there are a lot of configuration that once created will do the validation as per the requirement of the law. How do we identify designated zone? When you're creating the party, there is an option where You can specify that this particular party is a designated zone, such that, depending on, say, if the mainline person, when he is selling to the designated zone party, the VAT needs to be charged. And when he is buying from the designated zone, that needs to be captured for reverse charge accounting. All this requirement for the law, the moment you do the configuration of the master, it automatically takes care. Then of course the VAT duty ledger, one single VAT duty ledger, you configure them, then you pass the transactions. Okay? Every kind of transaction is now again monitored by the configuration that has been configured by you for your company. Printing, by click of a button, right, you can now generate the VAT return, VAT form 201 in the exact format that needs to be filled up on the FTA portal. So you just click on that and you have this PDF file generated as per the format that is available. All you need to do is just check this, take this as an input data point, and then you can go and use this information and upload it, enter it on the FTA site. Now there are certain things where it is very critical for us to, in fact our earlier speaker had mentioned about this. So box number 3, box number 6 and box number 10. So here if you see, the import has got 3 different behaviors. That imports which are not declared at the customs, import declared at the customs, import declared and paid at the customs. So these 3 information, right? So how can we handle it? And the right information needs to be reported into the right box. Right? Based on this requirement, there are configuration in Tally where it can clearly identify what are the transactions that are reported to the customs, reported and paid and not reported. Okay? And automatically those values will get captured either in box number 3 or box number 6, and the respective input tax credit will get captured in box number 10. Then various other options like advance receipt payment. So once the advance receipt payment is done, so automatically Tally will calculate, it will back calculate, because generally when you get an advance, you are not going to say them, okay, you give me advance plus the VAT of 5%. So when a lump sum amount is received, when you enter that advance, Tally will now back calculate 5%, and then the assessable value and the tax amount gets reported in the relevant box. And we have this reverse charge reporting. So all these things, I mean, like, the information that is pertaining to box number 3 and box number 6 will get reported, where you will get an information saying that, okay, these are the imports that you have done with these specifications, such that those informations are going into the right box. Advance receipt we are taking, reverse charge, then VAT paid to customs also will get reported. Just to give one simple example of how you are accounting and how the reverse charge report is going to help the assessee to know what is the liability that needs to be booked on the reverse charge basis. Okay? So the import entry is made. Now here again, the country is specified because this country is not in UAE, and this is a purchase entry. It will automatically recognize that these import will form part of the reverse charge liability. Right? And you enter in, if you have declared at the customs, whatever is the additional taxes, import duty and CAF customs can be entered there, such that the VAT can be computed appropriately. So you enter this entry. Now this is where the reverse charge report is provided in Tally, which gives you the transaction-wise information such that each and every transaction can be reconciled. It gives transaction-wise and says what is the taxable value and what is the amount of VAT that needs to be accounted on reverse charge basis. So right from the report, the accounting of the liability can be done from the system. Once the liability is booked, you will notice that the liability booked is information also is visible, such that you are very clear and confident that yes, whatever is the liability that needs to be booked on reverse charge basis is being accounted for and getting reported in the appropriate box. So reconciliation part. So once all this is done, how quickly, as a owner of the organization or as a senior person of the organization or the chartered accountant, how quickly can you now verify the transaction and then get the confidence of all the transactions being compliant as per the law, which is the VAT data reconciliation. So we have provided a very, very important report for the management and for the chartered accountant, where this is going to give the snapshot of the entire transaction that has taken place for a given VAT return period, whether it could be a month or it could be a quarter. So here you will notice that the top area where the red box is being highlighted, it is going to give you the statistics of all the transactions that is passed during the period. And it will also segregate the transactions and then say, okay, X number of transactions does not form part of the return, so which you really need not have to worry. But actually speaking, we have to really worry why it is not forming part of the transaction. So this report allows the user to drill down up to the voucher level. So each and every report, you highlight that particular title saying that not relevant for return, you enter into it, it is going to give the list of all the transactions, voucher type wise, saying that why these entries are not relevant. And if it is a contra entry, we know for sure that, okay, this is not relevant for the return. Okay. So then also we have two very important report which says incomplete or mismatch information for the return. So if there is any figure that is there, in this thing, I mean, like you can see that both this report, the statistics is 0. So in case if you have any number specified there, then for sure you know that the information that you are going to now provide is not as per the requirement of the law. Number one. So which means basically you will have to make sure that the incomplete or mismatch information to be resolved has been resolved and it is 0. The second one is basically the audit file. Even the audit file, even though it is not mandatory or it is not required now, we have provided the audit file, which along with filing of the return, you can now reconcile and make sure that all the necessary information that is required to be provided when the audit file information is required by the department, those information also can be verified and corrected on an ongoing basis, rather than, I mean, like, whenever the person is asking for the audit file, you go and then reconcile and then, get all those things corrected. On an ongoing basis, this also can be corrected. And the margin scheme, right? So we have handled margin scheme also. It's very simple. See, the whole thing, if you see the way we have developed the solution for VAT is the normal purchase, sale, and any other transaction that the businesses have been passing all these years will be the same. There is no change in the way that they have to account or they have to change their system of accounting just because they are using a software Tally for compliance purpose. It is going to be the normal transaction that they are going to enter. So in the margin scheme, basically, when you are making a sale entry, all the relevant information that is required to be reported for margin scheme is captured while passing this sale entry. It asks what is, from whom it is purchased, what is the date of purchase, what is the purchase value, what is the margin. Based on the margin, Tally will automatically back calculate the tax amount, and you will see that the margin is also reported where it gives the sales amount. The sales amount here needs to be the complete value of the thing. So VAT data reconciliation is done. So all now we have to do is log into the FTA and file the return. So logging into the FTA, file the return. Before filing the return, pay the VAT liability, and then you can file this return. So we have a lot of information regarding the domain aspect and also about the product. How can you now handle these kind of exceptions or the requirements or the transaction that needs to be passed in Tally is available. So you can find us in these social media, and these are the search. Basically, if you are looking for us for any material from us in YouTube, Facebook, or LinkedIn, you can just, if you type Tally Solutions Middle East, you will get our page. And if you are looking at Twitter, it is at Tally Middle East.
Our next speaker of the day, Mr. Bruce Hamilton, who is a partner indirect tax with Deloitte. And the session is What's in There for You in VAT. Bruce has over 30 years of work experience in indirect tax. Prior to joining Deloitte Middle East in June 2016 to assist with the implementation of VAT in the GCC, Bruce has spent 2 years in Malaysia assisting with the implementation process there. Since arriving in the GCC, Bruce has been extensively involved in assisting clients, including law firms, in implementing VAT in both the UAE and the KSA, having previously undertaken similar roles in Malaysia, Australia, South Africa, Singapore, Fiji, and a number of other countries, as well as having worked with GST in New Zealand. In working to address implementation of projects of this nature, Bruce brings a wealth of practical experience in the intricacies of the implementation process as well as the post-implementation bedding down of VAT, and his experiences crosses multiple industries including property development, oil and gas, retail, education and healthcare. Bruce holds a Bachelor of Accounting Sciences, a Bachelor of Laws and a Bachelor of Arts. He is a Chartered Tax Advisor in Australia and has completed the CTIM course on Malaysian GST in accordance with the requirements of the Royal Malaysian Customs Department, allowing him to operate as a tax advisor in Malaysia. Please join me in welcoming Mr. Bruce Hamilton on the stage.
Thank you. It looks like I've got the ultimate power. I'm the one person standing between you and dinner this evening. Let's just get this sorted out. Okay, we won't keep you here too long. What I'd like to do is just very quickly, I think, reflect a little bit on where we've been, where we've come from, how things have arrived where they are at the moment. I think most of you are probably, or certainly a fair number of you, are a little bit relieved after last week, having got rid of your first VAT returns. For some of you, that's still something that you can look forward to, probably with a bit of trepidation, but certainly it's something that is an achievement after the tumultuous times that we've had over the last number of months. I actually would like to just, we've got a sort of picture there that gives us a little sense of where we're at. When we started this particular slide, and this is one I've used on many occasions, and I think some of you might have seen it when I last spoke to you back in August 2016. It's changed somewhat since then, obviously, because now we're looking at a situation where we have gone past the 1st of January 2018. We have now embedded the VAT law in both UAE and Saudi Arabia. I'm pretty sure that most of you will have seen in recent times that Bahrain has indicated, initially they said on the 1st of October, but then subsequent discussions by the various ministers have not given a particular date, but certainly the intention is that they will be implementing VAT this year. What I think is probably important for us to understand is that if they were to implement VAT with effect from the 1st of October 2018, as they initially said, that's only 7 months away. If they, as is the case for all the other GCC countries, are going to introduce it with effect from the 1st of January 2018. That is only 9 months away. Now, I don't know about how your experiences have matched up over the last number of months, but certainly my experience and the discussions that we had with clients in Malaysia after the event there indicated that most of them would have preferred to have an implementation period of between 9 and 12 months, certainly the bigger companies amongst them. We were very often asked to achieve the same objective within 3 to 4 months, and in some cases less than that. And as you can imagine, that causes its own stresses and strains. Certainly from our own firm perspective, while we had built a significant team over a very short period of time, we had to look to our colleagues overseas to come and assist us. And fortunately for us, a number of our colleagues came from our Indian firm as well, having had just the pleasure of introducing the GST in India not long prior to that. So it's very important that one keeps ahead of the train. It's coming at you. You need to keep ahead of it in order to ensure that you are able to succeed. One of the reasons why I'm sort of covering off a little bit on the rest of the GCC is that because I would imagine there are going to be a number of you who, while your primary focus might be in the UAE and possibly the Saudi Arabia, you probably have got operations in other parts of the GCC as well. So believe it or not, you're going to have to go through this process again. And there will always be changes, there will be some subtle differences, and there will be some issues that you need to cover off once again. So take the experience you've got now already and use it to your own benefit is what I'm hoping to achieve tonight. I'm not going to go through the VAT returns and how you do them once again. So basically, last time I spoke to you, 16 August 2016. Just looking at your designated zone situation, and again, I'll only do this very quickly because I'm sure that many of you don't have designated zones or don't deal with designated zones. If you're supplying goods and you are interacting with a designated zone, if the goods are being supplied from outside the UAE, then it's treated as an out of scope. It's treated as no import VAT. So what we're looking at is the designated zone is considered to be not part of the UAE for VAT purposes, but only in respect of goods. So no import VAT when goods come into a designated zone from outside the UAE. If you supply goods from the designated zone to somewhere outside the UAE, then it's considered to be out of scope. So essentially, from a VAT perspective, the goods have never been in the UAE. If you supply goods from a designated zone to another designated zone, and remember there's about 20 of them, I think, then you're going to need to understand what the impact will be. And that can quite often happen. If those goods are going to be consumed in the second designated zone, then you need to charge VAT. If they are not going to be consumed, if they are either going to be incorporated and in something which is equally going to be supplied out of the designated zone, or if they are used for production, then you're okay. It's treated as out of scope. Now, if you happen to be supplying goods from the designated zone to the UAE, then at that point in time, we've had our concession, no import, but at that point in time, as the goods move from the designated zone to the UAE, that is treated as an import. And the VAT must be paid by the importer. And there needs to be documentation that goes with it. So that's very important to understand. And equally, if you supply goods from the UAE to the designated zone, you need to be able to charge VAT. Another unusual little quirk in the designated zone situation is that any supply of real estate, and that includes residential real estate, if it occurs in the designated zone, it's considered to be out of scope. So it's a little quirk in the process. When you're dealing with services, here I look at what our requirements are, and I thank our lucky stars that we didn't go down the route that they did in Malaysia, where it becomes incredibly complex. Here it's simply any suppliers of services from outside the UAE into the designated zone, subject to the reverse charge. Any exports of services from the designated zone to outside the UAE, it's zero rated as an export. Services from DZ to UAE, subject to 5% VAT, and likewise services from the UAE into the designated zone, 5% VAT, and any services from one designated zone to another, subject to 5%. Makes life simple, makes it a lot easier. So reality is the designated zones you're only really looking to deal with as a separate issue are the suppliers of goods. Special rules, there are special rules for treatment of the sale of commercial real estate. There are also special rules in respect of the treatment of residential real estate, but we'll cover that very briefly. So the rules change slightly very late in the piece. How do you account for VAT on the supply of commercial real estate? The concern of the FTA was that someone supplying commercial real estate, once they've supplied their commercial real estate, then what hold do the government have on them? They can take the money and run. And are they going to account for VAT? Probably not. Possibly not, maybe not. We don't know. So what they have now required is that if commercial real estate is being sold, the buyer, the purchaser, instead of paying the VAT across to the seller, has to go across to the FTA and pay them the VAT. So essentially they've got to produce a contract, they've got to pay the VAT directly to the FTA, and they get a certificate then, which they then take to the land office, and that will then, the land office can then transfer the ownership of the property. So it is a slightly unusual situation, and it's there for very good reasons. When you're dealing with residential real estate, you're probably already aware of the fact that new residential real estate, first occasion that it's supplied, it's 0%. Thereafter, residential real estate is going to be exempt. Now, the problem that I'll pass for you, the problem is that a lease, which is a one-year lease, can be your first supply of residential real estate. So that means then that you're accounting for VAT at 0% for the first year, and you are then making exempt supplies thereafter. Now what that means is that all of the costs that you've incurred in building that real estate, if those costs were incurred after VAT comes in, then you have to do a capital asset adjustment when you actually move from being zero-rated suppliers into exempt suppliers. And effectively, all those VAT calculations that you've made, where you've claimed your VAT back on the construction costs, you now have to refund those to the government. So it's very important you understand what that impact is. If it's a sale, well then that's well and good. You're making that first return. Your first supply is a sale. It's zero-rated. You're entitled to keep your credits going forward. Transfers of a going concern. What we're dealing with there is essentially you're selling, instead of selling the assets of a business, you're selling the business itself. So if you're looking at a situation where you're selling the assets, you're selling the goodwill, you're selling the customer book, you're selling all the intellectual property that might go with it, those sorts of things, as a going concern. So it enables the business to carry on as a going concern. Now, in many countries, what they do is they have special rules for that. At this stage in time, we're a little bit uncertain as to exactly how the FTA are going to treat those, and we might get an indication when they release their real estate guide as to what they're looking for. But what I just suggest to you is look at that as an issue. Now, what often you find in other countries, where there's any uncertainty as to whether something's a going concern, what will happen is that the business will simply sell the shares in the business, and they'll treat that, okay, that's an exempt supply, no big deal. The business is gone with all the assets. Problem is that when you buy a business, by buying the shares, you're also buying all their liabilities as far as previous VAT returns and everything else. So you need to be very careful with that, which is what I referred to earlier on. You need to do a due diligence. You need to establish that their VAT liabilities are clean. Another area that we've found has caused a bit of angst, and probably rightfully so because it's treated different ways in different countries, is if you are running a branch in the UAE, which is primarily aimed at looking at the marketing of your services. It doesn't enter into any sales contracts itself. It simply does all of this on behalf of the overseas owner, the head office. Now, the question has always been, if they're not making supplies, how can they register for VAT? And what has happened essentially, we've understood from the FTA, and it's been dealt with verbally, and we hope it'll come into writing soon, is the FTA are accepting that a branch which doesn't actually make supplies, because if you think about it, if its only supply is to its head office, that's one legal entity. You can't supply yourself. It's like me supplying this glass of water from my left hand to my right hand. It's still my glass of water. So legally, you have no change in ownership. There is no supply. So what we're saying is, well, a branch in those circumstances might not be making any supplies because it's only supplying services to its head office. But obviously, it's incurring a lot of cost. If you're sitting in DIFC, or if you're sitting in DMCC, or any of the other places, or anywhere else for that matter, you're incurring big rental costs, you're incurring utilities, all of those costs. You want to claim back the VAT on those. Fortunately, the FTA have looked at it, and from my understanding at this point in time, they're saying, okay, as long as the head office is making supplies that would, if they were made in UAE, be considered to be taxable supplies, then the branch can claim, can register for VAT purposes and can claim the VAT back. It's slightly less certain if you're dealing with a branch of a bank or a branch of a financial institution, where the financial institution might be making loans or something of that nature, which is treated as an exempt supply. So we need to keep an eye on that and make sure that we're okay. Just from a pure business perspective, and I won't go through each and every one of these lines because I'm sure you've probably had enough of it all by now. There are very special breakdowns of different functions that you have in businesses. You need to go through all of those breakdowns. You need to have a look at each of those in order to ensure that you are covering off on them. And what I'm talking about here is not so much the VAT consequences of those transactions. It's looking at the risk management. It's looking at the corporate governance. It's looking at how you're dealing with the various transactions that the business is undertaking. It's looking at who's responsible for various things. Yeah. Who's looking at the pricing? Are they adding VAT to it? Are the contracts appropriate? Who's looking at your cash flow? How's that changed from a perspective of having to deal with VAT? You're paying out VAT, sometimes quickly. If you're in a cash business or your supplies that you acquire are cash-based, you're paying out VAT long before you might be able to claim it back. So cash flow is very important, and cash flow goes to your working capital. So it's very important that you understand what impacts there are going to be. If your customers delay your payment by an extra month, they're now delaying 105 dirhams instead of 100. And that's what you're having to cover. So there are a lot of issues that you need to consider there. Your VAT recovery. We had a comment earlier this evening about VAT recovery, yes, they're saying, oh, it'll be done within 20, if you have a refund and you apply, it could be within 20 days. I hate to say it, but I'm a little bit of a cynic here, for simple reason of experience, because what will typically happen is no government likes to pay out money, particularly when they are then at risk of not being able to recover that if there's any issues with it. So what they will generally do, and this happened in Malaysia, they said, we will pay you out within 14 days. What they actually did was they sent you a letter within 14 days saying, we're going to now review your refund request, and we'll conduct an audit if we need to. And 6 months later, people were still waiting for refunds. So that is an issue you need to be aware of. Again, that goes to your cash flow. If you're waiting for a refund, that might be some time later, and you need to consider how long it's going to be from a cash flow perspective. Is it a vicious cycle? What you're now in, and we're now well into the way for our second VAT return, you need to be looking at your post-implementation strategy. How are you going to deal with VAT going forward? Are there changes you want to make? You implemented VAT very quickly. Did you cut corners during that period of time in order to ensure that you were in a place to make a VAT return or put a VAT return into place? So there are very important issues you need to consider there. You need to start mitigating your risks. You don't want to spend money on penalties and on, quite apart from anything else, management time dealing with all of these issues when you least need to do it. You need to consider what happens if you change your operations, how you do your business. You think about media, for instance. Media all used to be paper-based. Now, a significant proportion of it is internet-based. You think about how the Amazons in the world, or all of these, the souks of the world, they operate. They don't have a storefront. That's all on internet. How is that those changes are going to impact the way in which you're doing business, and how are they going to impact the way in which you do your VAT? You think about something like a sort of an internet-based business. You don't know where the source of the goods that you're buying is coming from. It's just on the cloud. And I don't know about you, but the cloud is a very ephemeral type of thing as far as I'm concerned. I don't know where the cloud is. I can't touch the cloud. It's something that we need to deal with, though. So we need to look at that. And then we need to look at external factors. How are our competitors dealing with issues? I'm aware of a particular sector, and I won't mention the sector at this stage, in the economy, where different suppliers are selling the same goods subject to different treatment for VAT purposes. Now, that is a reality we need to deal with. It's something that's not going to be easy to deal with. Certainly, the FTA at some point in time will give further guidance on it. But in the interim, if you're charging VAT on something and your competitor's not, how do you deal with that? What do you consider? Do you go dob the bin? Or do you go and speak to them and say, why are you doing it that way? Or do you go and speak to your advisors and saying, am I right? Or are they right? So there are a lot of issues there. And then your monthly compliance. You need to have that down to a fine art at this stage. You need to know that by this date of the month, you'll have closed off your books. By 2 days later, you're starting to prepare your VAT return. By 4 days later, you've got your VAT return in place. 5 days later, you've got someone's reviewed that VAT return. You're ready at every step of the way. You can't have a situation where someone who's supposed to sign off on something, well, he's gone off on leave, so what do we do now? Oh, wait until he comes back. You can't do that. So you've got to have that compliance process very much in place. So your goals for your post-implementation strategy: ensure your ongoing compliance, undertake regular reviews. What you got right this time, won't necessarily be right the next time for simple reason that A, the FTA might have changed their view on how a transaction works. B, your IT people might have made changes to your system because it was wrong in the first place, or they thought it was wrong, and they've now fixed it. Is it still right? We don't know. You need to have regular independent health checks. Get your advisors in, get them to have a look at what you're doing, making sure that you're right. Data analytics is something that probably you don't want to worry about, or you don't need to worry about right now, but it's certainly on an annual basis, I would suggest that you probably get someone to do a data run on what you've got. You've got all that information. Analytical tools nowadays can pick up an enormous amount of stuff. Yeah, pick up duplicate invoices, and that's at the very basic level. So there are things that you can use very much to make sure that you keep your risk management in process. Regular training of staff is very important. The people who helped you with the implementation now, 6 months' time, will they still be employees? They might have gone elsewhere. And they've taken all of that knowledge with them. You need to make sure that you have regular training programs for your staff in order to ensure that you are kept well ahead. You need to make sure that authorized people, the people who sign off on various things, that you have backup. If they aren't around, who's going to do it? And who's going to make sure that it goes through properly? Systems compliance, I won't go through in any great detail at this stage, and dealing with ambiguities. New laws always have ambiguities. That's a given. I can tell you right now, you go to the courts in the UK, 1973 they brought the VAT in. You go to the UK, you can go to a court, I guarantee you'll find at least one court case on something dealing with the nature of what a supply is. Something fundamental to how VAT works, and they're still dealing with court cases on it. Other issues, look at your pricing. How are you dealing with that? The authorities have clamped down on businesses that they felt were pricing incorrectly and taking advantage of consumers. So make sure your pricing is right. Look at your fundamentals. Look at how are you using self-billing invoices? Are they correct? Keep an eye on the FTA guides. Make sure that you keep up with what they're doing. And sometimes those guides won't necessarily deal with a transaction the way you have been dealing with it. And sometimes there's very good reasons for that. So if you come up with a situation where a guide tells you something different from the way you've been doing it, go speak to your advisor. Make sure that you really understand, because sometimes there are underlying requirements which the FTA might be considering which don't apply to you. So just be very aware of that. It's a big change. We're in a situation where this country hasn't had a comprehensive tax system before. It is something that's a cultural change. Business culture has to change. We need to deal with it. We need to have a robust accounting system. That ERP system is going to be crucial to you. You don't want to have a situation where you're doing multiple manual reconciliations, because that's where you get errors, as you will well know. So you want to reduce the additional effort that you are having to deal with. The one thing I've noticed with other countries is the businesses that do well after VAT are the ones that look at the information that they are now generating for their VAT return and ask themselves, how can they use that for management purposes? Is there something they can derive from that information which really allows them to really manage their business better? It might be something to do with your stock. Can you now use a just-in-time system which you couldn't use previously? It might be a variety of managing your assets, all sorts of things like that. Use that information. You've got it now. Use it to your best ability. So, again, I won't go through all of this because I don't want to stand between you and dinner tonight for much longer. We're already over time. So, big question for the day is, have you considered all the requirements that you maybe should have considered while you were doing implementation, but things fell by the wayside because you had limited time. Unfortunately, and I'm going to sort of wave the flag here, I said to you 2 years ago, 18 months ago, it's going to take a long time. Don't wait for the law. Don't wait for the regulations. There's a lot that you can do between now and then. And some businesses listened and did that. Others, unfortunately, didn't. And hopefully they're not going to pay the price for it. Make sure that you don't pay the price for it by going back and fixing things now. Don't wait for the FTA to come and help you. Post-implementation reviews, training, knowledge sharing, all of these things, you'll have access to the slide deck, so I won't necessarily go through everything at this stage. Successful businesses make VAT a lifestyle choice within the business going forward. One thing I would suggest to you, and you've got paper copies on your table, but I think it is very important that you have a look at this. I'm guessing that 99.9% of you have got smartphones. I can see many of you taking photos of the slides anyway. As I say, you'll get the copy of the slides. Those of you who've got smartphones, do yourself a favor. Go to your VAT app. Yes, your app, your app store on your phone, whether it's Google or whether it's iOS. Pick up and get VAT in the GCC guide. Doesn't cost you a cent. You will find that it's updated regularly. It covers learning materials, it covers quizzes, it covers VAT Academy events where we do go through things like our recent ones were on how to do your VAT return. It looks at industry impacts, it keeps you up to date with the legislation, it keeps you up to date on multiple levels. It's updated literally. I very seldom will pick it up in the morning, switch it on, and it doesn't tell me, do you want to install the latest update? And it not only covers UAE, it covers KSA, and as and when Bahrain, Oman, Qatar, which incidentally Qatar announced today that they were going to go online 1 January this coming year. So they are full steam ahead with that as well. So it will cover each and every one of those GCC countries as and when the information becomes available. Without further ado, I'm sure we'll all say thank you for a great evening certainly from the other speakers this evening. I certainly learned quite a few things and appreciated sort of seeing it all.
Thank you very much for your time today. I mean, it's a great evening altogether, and it's a great privilege for all our members to really understand a lot on technology and a lot of gray areas on the VAT. So I would like to thank all our speakers, and to facilitate Mr. Bruce, I would like to call our chairman, C. Naveen Sharma, and vice chairman, C. Mahmood Bangara, and treasurer, Sundar Nurani, and our secretary, our very warm secretary, C. Anish Mehta, to be on the stage.